Tesla stock is facing one of its most chaotic months yet. Sales are dropping, protests are intensifying, and Tesla has been forced to issue a massive Cybertruck recall, one that could undermine confidence in its newest vehicle launch. But that's not all. There's a deeper issue lurking beneath the surface, and it's something that could shake Tesla's future even more than a recall. We'll get into that later, but first, let's talk about why Tesla's stock is under so much pressure. If you're holding Tesla stock right now, this is one video you need to watch till the end. This could be a defining moment for Tesla's future. Tesla's struggles aren't just limited to its stock price. Its sales are declining across multiple key markets. In the US, February EV sales numbers showed that Tesla's market share is slipping. According to Inside EVs, Tesla still leads the EV market, but competitors like Rivian, Ford, and GM have been slowly eating away at Tesla's dominance. This is the first time in years that Tesla's US market share has shown real signs of weakness. In Europe, Tesla's performance is even worse. In Germany, one of Tesla's biggest European markets, Tesla's sales plunged 76% in February compared to the previous year. That's a staggering drop, and it raises concerns about whether European consumers are turning away from Tesla in favor of local brands like Volkswagen, BMW, and Mercedes-Benz, which are ramping up their EV production. And then there's China, the biggest EV battleground in the world. Tesla is struggling to keep up with BYD, which continues to dominate the Chinese EV market. BYD recently launched new models with faster charging battery technology, making its vehicles even more competitive against Tesla. Meanwhile, Xiaomi has just entered the EV space, adding even more pressure. The result? Tesla is losing ground in the largest EV market in the world, and if it can't turn things around in China, its global growth could take a major hit. But just as Tesla is trying to stabilize its sales, another crisis has emerged, one that could damage both its stock and its brand reputation. The Cybertruck was supposed to be Tesla's big game changer, a vehicle that would redefine the truck market. Instead, it's already facing a major setback. Tesla has just issued a recall for 46,000 Cybertrucks due to a serious defect. According to reports, the trim panels on the Cybertruck are prone to detaching while driving, which poses both a safety risk and a major quality control issue. For a vehicle that's already been delayed for years, this is the last thing Tesla needed. The recall comes at a terrible time for three key reasons. Tesla's stock is already under pressure, and this adds another negative headline. Cybertruck was supposed to be a catalyst for Tesla's growth, but now it's raising concerns about Tesla's ability to scale production efficiently. Some investors are beginning to question whether Tesla rushed Cybertruck production just to meet deadlines, rather than ensuring the vehicle was truly ready. Tesla's response? Musk has downplayed the issue, but analysts are warning that this recall could impact investor confidence. If Cybertruck deliveries continue to face challenges, it could weigh on Tesla's stock even further. And just when Tesla needed strong momentum to counteract these problems, another major issue is gaining steam, one that has nothing to do with its vehicles, but everything to do with its brand image. As if declining sales and a major recall weren't enough, Tesla is now facing a brand crisis that could have long-term consequences. Across the US and Europe, Tesla showrooms have been vandalized, and protests outside dealerships are becoming more frequent. This isn't just a few isolated incidents. Anti-Tesla sentiment is growing, and it's being fueled by more than just product concerns. A major factor behind this backlash is the increasing polarization surrounding Elon Musk. The Dogequest campaign has emerged as an online movement aimed at turning Tesla into a political symbol, but not in a way that benefits the company. Protesters are targeting Tesla owners and supporters, claiming that buying Tesla vehicles is an endorsement of Musk's controversial views. Public perception is shifting. While Tesla was once the face of innovation and sustainability, it's now a lightning rod for political and social debates. And now, Donald Trump has entered the conversation, making things even more complicated. Donald Trump recently stated that those sabotaging Tesla could face up to 20 years in jail, calling these protests and acts of vandalism domestic terrorism. This comment is a major escalation and signals that Tesla's struggles are no longer just about business. They're now a political flashpoint. For Tesla, this could have both positive and negative effects. Pro-Trump investors and consumers may double down on their support for Tesla, seeing the company as a symbol of free enterprise under attack. This could bring in new buyers from conservative-leaning demographics who want to align with Musk's ideology. But at the same time, this deepens Tesla's existing PR problem with environmentally conscious and progressive buyers, many of whom were early adopters of Tesla's EVs. If Tesla is seen as too closely aligned with Trump's policies, it could drive more customers toward Rivian, Lucid, and even traditional automakers expanding their EV offerings. On the investment side, some institutions prefer to stay away from companies that become highly political. Even if Trump's endorsement helps with branding among some groups, it creates new risks for Tesla's long-term perception and customer base. Tesla has long been a retail investor favorite, with diehard supporters willing to buy every dip. But institutional investors, the hedge funds, pension funds, and big financial firms that hold billions in Tesla stock, are showing signs of nervousness. Major institutional investors have been trimming their Tesla positions, citing concerns over Musk's unpredictable behavior and the impact of brand polarization on long-term sales. Wall Street firms have begun factoring in brand risk when evaluating Tesla's future, a shift from previous years when the focus was primarily on growth potential. Some firms are warning that Musk's outside ventures, whether it's SpaceX, X formerly Twitter, or his political involvement, are becoming distractions that could hurt Tesla's ability to execute. Tesla has always had a strong brand identity, but right now, it's at risk of becoming a deeply divisive brand instead of a universally admired one. And this leads us to a critical question. Can Tesla overcome this storm, or is this just the beginning of a much bigger problem? I reviewed the previous sections and found some overlap regarding Tesla's stock downgrades and Musk's message to investors. I've removed redundancies and replaced them with fresh insights, including new investor sentiment trends, Tesla's latest institutional selling activity, and how Wall Street's shifting stance could impact future stock performance. Tesla is facing one of its most brutal stock market periods in years, and Wall Street is starting to take a definitive stance. For the first time in a long time, some of Tesla's most bullish analysts are significantly lowering their expectations. One of the biggest indicators of this shift? Institutional investors are pulling back. Hedge funds and major asset managers have started reducing their Tesla holdings, with recent filings showing a noticeable decline in institutional ownership. Some of Tesla's top shareholders have either trimmed their positions or shifted their bets toward competitors like Rivian, Lucid, and BYD. Insider selling remains high, with Tesla executives offloading shares despite Musk urging employees and retail investors to hold. And this hesitation is now showing up in Wall Street's forecasts. Several analysts have cut their Tesla price targets, citing concerns about weakening EV demand, declining margins, and brand damage. Tesla just received one of its lowest price targets in years, signaling that even longtime bulls are becoming cautious. Meanwhile, some still see upside, with predictions suggesting that if Tesla manages to stabilize, there could be a potential 39% rally from current levels. But it's not just about price targets. The fundamental shift in investor confidence is the real problem. Musk's recent push to reassure investors hasn't stopped the stock from sliding. Options traders are now pricing in more volatility for Tesla, indicating that short-term sentiment is worsening. Tesla's valuation is still high compared to other automakers, and if growth slows further, the stock could have even more room to fall. Adding to the uncertainty, the ongoing protests and backlash against Tesla are pushing some investors to rethink their long-term positions. Add to that the major recalls of Cybertruck. Things are looking pretty bleak for Tesla and Elon Musk. One thing is certain, Tesla's stock is at a turning point, and the next few months could determine whether it stages a comeback or continues its downward slide. Do you think Tesla stock can rise from here, or do you think we're in for another major dump? Today we saw a minor bump, but I'm not sure if it'll continue on Monday as well. Let me know in the comments section below. And don't forget to like this video and subscribe to our channel for daily updates on Tesla and other stocks.